Hello traders everywhere, Adam Hewison here, president and founder of INO.com and co-founder of MarketClub with your market update for Monday the 28th of January. Well, guess what? 2013 turns out to be the best January since 1997 for stocks. That's pretty amazing. That's 16 years. Now, there are two worlds out there. There's the real world, that's Main Street, and there's Wall Street. And the two are somewhat separated in terms of their reality perception. So right now it looks like stocks are going to go higher. Okay, also after the close today, Yahoo right here reports after the bell their Q4 earnings. And the question is Yahoo, which has got a 90 here, we know it's an uptrend, is that going to have some of the Marissa Mayer magic rubbed off on it? You know, Marissa, you may remember, was with Google for many years. She was a chief executive and spokesperson for them, and you can see the stock has actually moved up very nicely from this area. You can see the monthly kicked in here at 1637, currently trading at 2028. Just had a weekly signal at 2031. That's a good sign, and it looks as though this market wants to go higher. So even after the bell, we may see a pullback, but the reality is the trend is certainly intact for Yahoo to go higher. Now, scoping this out just a little bit further, you'll see, let's say, a 1 year or even a 2 year picture. Let's go to a 5 year picture. You can see we could basically get this market. It's a big base here, a lot of potential growth. It has 750 million users. That's an awful lot of users for any website. And you can see they have a potential to monetize that and push it high. So I could see this market going very easily into the mid-20s, 26, 27 maybe. But generally speaking, this market is in an uptrend, and it should be recognized for that. So let's just go back to a 3-month picture and go to our next market that we're going to be looking at, and that's crude oil. Crude oil has been on the march for quite some time. You can see that for the last several days, this is Sunday, but for the last several days, we've sort of flattened out right around the 96.15, 96 area. And I think we're just sort of gearing up to have another push. But the trend is definitely on the upside. You can see where the monthly kicked in right here at 95.21. We're looking at the March contract, which is going to be soon going off the board. We'll be moving over to the next month. But you can see the trend is very clearly up, 95.21. It's 96.15. And you can see from the weeklies, which we use more than the monthlies, it's been long since 91.53. So that's a very important signal for this. We use the weeklies and the dailies for timing. So 96.68 is the last buy signal we had on the dailies, and you can see the market trading below that. But the general trend is still very positive. And if you scope this out, as we've done so many times, you can see this market has a really big base to work from to push it higher. So I think we'll see this market continue to improve, and maybe it's going to be the improving world economy that's going to drive prices up. Obviously, we're not just the only users of crude oil here in the States. You've got obviously Asia, and you have China and India and a number of other countries that are emerging and using more and more gasoline and crude oil. So let's see how that plays out. But generally speaking, the trend is very clearly a positive for crude oil. Now, looking at Forex, this is the gold rather, and you can see this has been a little bit on the defensive, which we were not enthusiastic. We were quoted in some of the Financial Times reports as saying we weren't. The building blocks have just not been put in place yet for gold to go higher. You can see right now, let me get my telestrator. You can see right now we've sort of got this resistance level here, resistance, and that's around the 1700 level. And you've got support coming in here around the 1640 level. So what you're seeing is really a big trading range. And I think that's the operative word right now for gold, is a trading range. And I think we'll get down here, and I think we'll probably back up. But the market is setting itself up. You see we're oversold here on the Williams percent R. The market's setting itself up for another rally. So watch this very carefully. You've got the weekly right here, which is positive, which is a good sign because we look at the weekly and the daily. But the daily right now is negative. So we want to see that daily kick up again. This one right here, kick up on the upside. When that happens, we want to be a buyer. And that's a very short-term trading program. So that would be something to take into consideration if you take that advice. So let's clear the screen and go back to our portfolio and look at the euro against the dollar. Now the dollar, we closed in new high ground on Friday. Not much going on Sunday. Very quiet today so far, but this market trend, which we've been on for quite some time, you can see 127, the market's at 134. Most people got this wrong who are fundamental traders, and this is the key thing with technicals, is they help you time the market, and this is what we do so well with our trade triangles. You can see 127, 129, 133. So everything is in a plus column here in a very strong trend because you have a plus 100. So not to say you can't see some pullback, but the trend is your friend and the trend wants to go higher. So if you scope this out just a little bit further, you can see we could extend that possibly up a little higher. We've got as high as, this is about the 135 level, 134.90 level. So we could get up to these levels. Once we get there, we're going to have to re-examine this thing. But it looks to me like you're getting a, let me just draw this picture because it could be a very powerful one for the euro. So here's, we talked about these big bases. This is almost like a perfect, huge head and shoulders extending really from November of 2011 all the way through to 2013. Now, what we can do is quite clearly draw a line across the top here, and that's going to be around the 134.70 level. If we go through there, let's say 135, then you can take the measurement from the lows here. Let's say we'll just round this up to 122. It's even though it went down at 120 to 134. So you've got 12. So you could say 146 on the upside for the euro if it closes over this level. That's just a measurement, technical measurement. So if we clear the screen off and we just zip this out a little bit, you'll see what I mean. We have been up to the 146 level before. I'll go max. You can see we've been up to the 150 level. So 146 is not out of the question, and this formation looks very, very powerful to me. So let's watch that very carefully. Okay, looking at the S&P 500 cash, take some of these triangles off, and let's get a little bit closer in here. And let's just do a 6 month. That'll be fine. So you can see the market's basically broken out. We're looking for this to go to the 1550 level, even the 1600 level. Very powerful bullish market right now. As I said at the top of the hour, biggest month of gains for stocks since 1997. That is not to be ignored. So something is going on. You can see we've got our parabolics creeping up here at 1480. Obviously, we wouldn't like to see the market go through there. That'll give it some momentum on the downside for short term, but longer term, it looks like it wants to go higher. And if we put our trade triangles in, you can see they kicked in right here at 1470 and then 1467, so in 1466. So everything is very, very positive. So everyone's feeling pretty good about their stock holdings right now. So let's move along to the Dow. The Dow is actually doing pretty much the same thing. You can see our buy point here, a little late to the party on the Dow, but basically the trend is going higher. 13,661, 13,878. So we've got a couple of hundred points profit in this, but it looks like it wants to continue. Now, we're going to see some pullback. Nothing goes up forever in a straight line. So you're going to see some backing and filling, some consolidation, but we are probably going to head higher. We're looking for this market to move higher. Now on the NASDAQ's been very late to the party, and this really hasn't moved. As you can see, our monthly trade triangle is still negative, and that's indicating a sideways market. And it still hasn't taken out the September, October highs that we saw last year. So this is not particularly a good sign for this market. Not to say it can't go higher, it's just not going to enjoy the same sort of freedom as the S&P 500 and the Dow enjoys. Moving on to our big movers today. Hess is a big mover, but what I want to show you is, look, we picked up Hess right here at 51.14. It's trading at 61.97. So again, when these monthly trade triangles kick in, really pay attention. How you find them is going to our trade triangle tool right here. So you click on there, and this will tell you all of the markets that you want to look at. So we can say, okay, equity. We want volume. I like to see volume, big volume. I don't like to trade thinly traded markets. And you want to look at monthly trade triangles. And we can search, let's say just today. We'll just do it today and see if anything's come up. And there you have it. So McDonald's, big kick in on that. That's a new triangle for McDonald's. So let's just do changes last. So you can sort all these markets. So there you have it. So McDonald's is still on the top. Oop. And you can see PetSmart negative. We're covering that stock today. Not a good sign there. And you can see all the other markets that are doing well. Some of these, obviously, the 74 cents, don't even pay attention to those. Just pay attention to big liquid markets that have a well-known. So Weatherford International, that's a big signal there. So again, watch these signals, the monthlies. Very, very powerful and easy to use. So that's how we find the winning trade. So you may go into these markets for a while, but you'll be obviously enjoying some nice profits using the trade triangles over time. So let's go to our waste management. Now that's plus 100, so we know the trend is positive. So today's big move here was a big move. You can see how it traded all the way up to 37. It's come back somewhat, but nonetheless, it's the monthly kicked in at 34.45. Again, a very positive sign. And again, you've got a nice base to push this market higher. So moving along to our next market, this is PetSmart. We talked about this. Look at the signal today. From 64.83, it's 64.29 now, and still really not looking good. It's if we scope this out some further, let's say a couple of years, this is not a good sign. If we close down here, this is going to be a huge top. You can just see how this rounds out the stock like this, and it looks like you got a breakout to the downside here. We've got a monthly, obviously very important, and you can see all of our indicators are negative, indicating a strong downward trend. So I think that's going to continue to evaporate, maybe down to the 55 level, maybe even lower. But certainly the 60, 55 would be in the scope of things here. So let's clear the screen, and let's go to our next market. That's Southwestern Energy, and again, this is a plus 55. Now this is where this is a big loser today. Now here's the reason why I think the triangles are so important and can really, really help you. So this is a 1 year. Let's just go to 6 months. So here you have a mixed picture, and what I mean by a mixed picture is this: you have the monthly, which is the important element in stocks, right here. It's pointing down. You have the weekly right here, green. You see the green arrow? That's pointing up. So when you have this conflict, it is like this. You have one going up and one going down. It's like a neutral position. You just don't want to be in the market. You want to be out of this market because there's nothing, the odds are just not in your favor of doing anything quickly with this market. So get in cash or diversify into a number of markets. But certainly you should be neutral. The 55 is a trading range. It's not usually a market for long-term investors. So let's just clear the screen and mosey on to our next stock, and that's PPG Industries. And you can see there, now we do have, what's interesting here, you've seen a pullback, which is nice. You go to 55, but look at the difference here. You have a monthly triangle that is green right here. From 90, I might add. The market's trading 139, so it's like 40. It's a huge move in this. And you've got a green weekly. So you've got a up there and up there, a weekly and a monthly, both in the same direction. What does that mean? It means you can probably go in and buy this market on some sort of stabilization. And it could be the market comes down here and maybe pops around here, and then starts going back up. Then you should maybe look to be a buyer. But again, you've got our areas. You can use our stops with our monthly trade triangle, weekly trade triangle. If you get that, this turns red, just exit the stock. It's just that simple. So we're also getting into a situation where the market's pretty oversold. So let's see how that works. And let's go clear the screen and go back to our portfolio. And that was the last one of the breed. So let's take a look at Yahoo after the close today and see how Marissa did with the stock. You can see it's a little bit on the defensive today. It's down manageably 0.36%, not very much, but the reality is this stock is in a bull trend and it's likely to continue. And if it pulls back, I think probably to the midpoint 1950, it's probably a buy with stops just below the 19 level. So let's see how that plays out. I'm Adam Hewison for Market Club. Thanks so much for spending the time with us today, and